May I remind you that trading is risky and not suitable for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to Monday, January 16th, QuantBox Daily London Briefing. Hello, my babies. All right, so before we get started, what is QuantBox? For those of you who are new, QuantBox is your global macroeconomic Quant-in-a-Box. It is an amazing online tool that you can have access to, which is going to give you everything you need to formulate, not even formulate, it's going to give you a fundamental bias. It'll take all the information from economics to COT data to seasonality. It even includes some technicals, and it gives you a bias on a particular currency pair that you can then exercise in the market using technical analysis. It's very, very cool. And the best thing is a 1 week trial is just $7.90. Okay, so what we do in this session is we use QuantBox. We use a particular part of QuantBox, the market heat map. We take a look at the currency pairs that are the most bullish and most bearish for the previous session. We then look at fundamental bias on those currency pairs. And then we then take a look at our technicals and see if we can identify an opportunity to trade. Let me show you the strategy quickly. So we'll start with the bullish pairs. As you can see right now, all of our indices are up. So we've got a risk on day so far. Okay. We've got our CAD yen, Kiwi yen, pound yen, Swiss franc yen. It's a risk on day. Okay. That means we should see dollar weakness and yen weakness. Okay. Maybe even some Swissy weakness, right? If we look at the bottom down here, we can see that that's exactly what's happening, right? USD ZAR down, USD CAD down, USD Swissy down, Aussie Kiwi, Euro CAD, cool. Our indice on Japan is down. Okay, that's interesting. And pound dollar all the way down here. The gray ones mean, well, look at the red and the blue. That's what you're paying attention to. So we'll start with the blue, CAD yen. In fact, what we can do is we can take a look at each of our yens. We can jump into a second tab. I've got two QuantBox tabs open. So I get my heat map over here. I jump into my second tab over here. I take a look at my yen pairs. I'm looking for a specific bias. Now, what's happened is these are bullish, right? They're the most bullish for the session. So what I'm looking for is, have I got a bullish bias on the yen pairs and can I continue trading in a bullish direction? Or have I got a bearish bias in the yen pairs and has price come up to resistance so I can sell? And if they're neutral, then I just use technicals, okay? So we can see Aussie yen coming through the sell, CAD yen coming through the sell, Euro yen coming through neutral, pound yen coming through the strong sell, and Kiwi yen coming through neutral, all right? So that means that I've got sell / neutral on the most of these. Well, in fact, there's no buyers, okay? That's interesting. Now, you see, normally, if you're in the market, you would be looking at your yen pairs. We'll start with our Aussie yen, and you'd automatically be saying, okay, cool, I'm looking to buy because price is down here or price is down here at a weekly M2, and so you'd be bullish. But we can confirm that our bias on Aussie yen is currently bearish, okay? Which means we're looking for opportunities to sell. We then look at our chart and say, okay, I can see price has come up, now price has come down. We've got this support left-hand side that price is currently sitting at. I would not sell here, okay? We can then line up and say, well, where is resistance? Well, resistance isn't here. Resistance is higher up, maybe coming up for a lower high, coming up for a double top, not too sure what, coming up for 21 EMA, although right now I'm not going to predict that because you can see price is currently making higher lows, okay? And so because there's no opportunity for bearishness, you can see we've got a 21 EMA on the H1 time frame, but I'm not liking the price action. Price making higher lows, coming up over here. I'm not a big fan of that price action. I want to see some kind of bearish indication on H4 first. So what I then do is I then move on to the next pair. Take a look at CAD yen, and we can see here price all the way down. Now, remember last week we basically trapped price in a range. We still said we'd like to see price come up and make a lower high. That didn't happen, so price came all the way down. And I said to you, well, if price hasn't made a lower high, chances are price will come all the way back up. Price currently today at a weekly M2, our CAD yen bias coming through the sell. So fundamentally, I cannot trade this. Now, that's what QuantBox does for you, because the number of times people jump into trades because they see it down here at an M2 or they see price being low and they say, well, I'm going to buy it because why not? Now you can use your fundamentals to identify the better direction that you should be in and wait for that direction to take place. So right now, looking at this, you'd say to yourself, okay, I don't have price currently at resistance, so I can't sell this right now. And you then move on to the next pair. Okay, it keeps you out of trouble. So we got euro yen down here as well, and looking at euro yen coming through neutral. Okay, cool. So in this situation here, euro yen comes through neutral. I can use technicals in this situation. So what I can do here is I can say, okay, have I got an opportunity to buy? What am I looking for? Well, it's pretty simple. I've got a daily M2 down here. I've got a weekly M2 down here. From a daily perspective, price is currently at the bottom of the range. So all I could do to enter this trade, very simply, on an M15 time frame, wait for the higher high, higher low. Now you can see price currently stopped at the 100 moving average. The 2155 about to cross. What I'd like to see is I'd like to see price come up, make a higher high, come back down, make a higher low, 21 cross the 55, and then look for a buying opportunity, okay? That isn't happening currently. It might be something that sets up during New York. Move on. Pound yen. Okay, so pound yen coming through a strong sell on QuantBox. Currently not in position for a sell. You can see here we trapped price. We didn't get a lower high over here. Price all the way down here. I need to wait for this to come up to resistance. It's not currently there. I then move on. Okay, Kiwi yen coming through. Kiwi yen, I believe it was neutral. Yes, indeed. So Kiwi yen coming through neutral. So you can see here currently out of position for a sell. I would need to wait for price to come up to resistance. Okay, so none of my yen pairs are currently in a situation where I can trade them. Okay, what you're going to realize as you start using this tool is that Forex is not an ATM machine. If you wait for the right setups and your fundamental bias match your technical bias, then you're going to make money. When it doesn't, you sit back and you don't lose money. Okay. Now, of course, you can go through QuantBox. You can do the exact same thing with all the other pairs over here. I'm going to skip down to the biggest, most bearish pairs for the session. Let's take a look at USD ZAR. So looking at USD ZAR in our cross currencies, we can see here that USD ZAR coming through the bias of neutral. Okay, USD ZAR, bias of neutral. And where is my USD ZAR? There it is over there. Okay, cool. Bias of neutral. So therefore, I'm basically in a situation where I can do whatever I want because I'm just going to use technicals. Coming off a weekly M2 price, you can see the H4 candle down here, okay? Price is not currently at support. Is price currently at resistance? Well, the thing is, the structure here where price came up for 21 EMA, came back down, didn't make a lower low, now price is coming up. I'm not a fan of selling right now, okay? I could wait for this 4-hour candle to close and then see where price closes and then look to exercise a potential trade in the market while verifying on a lower time frame, okay? So let's move on, okay? So let's see, USD CAD coming through over here. A buy, cool. So USD CAD, let's take a look at USD CAD. A buy, well, we've got our daily time frame prices all the way down here, almost at a profit-taking zone, monthly target. We've got price coming off a weekly M2, price currently consolidating. So what I'd like to do here is, if you're going to trade the range, you're either buying at the bottom of the range or you're waiting for price to break out and pull back to the top of the range. Alternatively, if you are currently looking to buy this as it stands right now, you need a higher high, higher low on an M15 time frame. Okay, you can see right now, we're not really getting those, okay? So until you get that, you leave it alone. Why? Because you avoid trading this nasty consolidatory type of range, okay? Cool. We then go on to dollar Swissy. We can take a look at dollar Swissy. So dollar Swissy over here is coming through with a neutral bias, okay? So we'll rely on technicals then. So USD Swissy, I'll just go my default. I've got USD Swissy over here. So USD Swissy, in terms of daily, it's not really sitting anywhere. In terms of the H4, also not looking like anything, right? Look at that chart. You can see it just looks like a whole bunch of sideways mess. I'm going to leave that alone. Let's see if we can get something else over here. Aussie Kiwi. Aussie Kiwi, looking at my crosses. Aussie Kiwi all the way down over here. Aussie Kiwi, sell. Okay, now we've been looking at Aussie Kiwi for a while now. We actually had a trade we set up that we discussed last week. It didn't work out. Well, we didn't take the trade because we never got the confirmation of setup. Okay, it was actually inside this range over here. And then I said to you, well, you know, wait for price to get up to, I just got H4. Price was over here. And I said, well, as price gets up to the profit-taking zone, that might be where you want to sell. And as you can see now, we're back in another range, okay? And so we can do the exact same thing. Trap price in a range, wait for price to break out. You got your weekly M3. Your 21 is above your 55, though, so you want to be careful of that. Ideally, what you'd like to see here is a lower low, lower high. Wait for price to break, pull back up, hit resistance or double top, and then come back down, okay? In the meantime, wait for that to set up. Next trade or potential, let's see, Euro CAD. So Euro CAD coming through over here. Let's see, Euro CAD coming through the bias of neutral. Okay, cool. So Euro CAD coming to the bias of neutral. Let's have a look and see Euro CAD. Here we are. All right, so Euro CAD currently sitting up at the monthly M3. Okay, top of the range. You can see there, currently top of the range. So not a bad opportunity. You can see the top of the range. There might be an opportunity here, friends. So what we need to do is, since we're coming off the M3 over there, okay, I'm not worried about the 21.55. I mean, of course, you know, price could come back down, but here's what you're going to do to verify a sell. You're going to wait for a lower low, lower high. It's as easy as that. Look at your M15 time frame, wait for that lower low, lower high. You can see price currently sitting in this range over here. You can actually trap price in the smaller range. Okay, let's do this. And inside there, you're simply waiting for price either at the top of the range, you can sell there. I don't like that move though, because it doesn't guarantee price is going to go down. What I prefer is let price come off the top of the range, let price break out, pull back for a sell, and then you take it down. And once you pull it back for a sell, 21's cost to 55, you're taking it down. Okay. Looks like everything we're looking at right now is telling us that we have to wait for more setups. That's just the way it is. Last one, pound CAD. Let's take a look. Pound CAD coming through the bias of neutral. So pound CAD in the market, pound CAD. We've got pound CAD daily. Nothing going on there. Pound CAD H4 also looking pretty nasty. You have got an M3 over here. This could work out. You can see top of the range there, left-hand side. So again, what you're looking for here is that lower low, lower high. And you can see that price broke out of this range over here. We haven't made that lower high. So you definitely want to see, and it happens quite quickly. When price breaks out of a range, it usually pulls back quite quickly. So you're looking for quite a quick pullback. You see right now, prices come down. Now it's chilling at this support over here. You want to see a 21 across the 55 price breakout, pullback, sell, and then you're in the money. But right now, perhaps what you'd prefer to do is set up a lower low, lower high on the H4 time frame. Now, what I've just done very, very quickly, you can do with the rest of these currency pairs, and not just at London. Do this at New York Stock Exchange, and at Asia. It's a very, very nice tool. Okay, this is based on actual moves in the market. Unfortunately, although we've looked at each of these pairs, we haven't really seen fantastic opportunities based on marrying fundamental bias with our technical bias. That just means we have to be patient. Sometimes the market's going to be like this. We were like this last week, but the thing is, don't become complacent, because the moment you become complacent, you then decide not to look at your charts because, you know, we throw a bit of a tantrum. Why is the market going our way? Why can't I make money today? Then we go back the following day and we see, oh goodness, if I had just used this tool and stuck to my strategy and been consistent, I would have made money. Consistency is key. Control is essential, and patience is the secret. So stay disciplined, stay patient, stay liquid. I'll see you guys tomorrow. Have a good day. Bye-bye.